Well, that was some of the key voices from day one of the Global Fintech Fest. Now, on the sidelines, I also spoke with early-stage venture capital firm Elevation Capital, which is bullish on the fintech sector. It has already invested $2 billion in total in India across startups, out of which $500 million is exclusively into fintechs and it holds companies like Paytm, even traditional companies like Arora and Edelweiss in its portfolio. And they told me that they expect fintech sector to be a $400 billion opportunity by 2030. Listen in. I want to start by asking you about your report that you recently released. A $400 billion opportunity for fintechs in just the next 7 years or so. Tell us what will drive this kind of growth, because so far we've seen fintechs very much focus on specific parts of the financial services industry, not really spread out to the larger opportunities.
My pleasure. Thank you so much for having me. Look, we feel, having now invested in India for over 20 years, we feel quite bullish about financial services and fintech space overall. We think today we are at a very interesting inflection point where a number of forces are coming together.
Over the last couple of years, all of the startups have seen a dip in funding. A lot of you are sitting with dry powder. Do you see the situation changing soon, and what will drive that change?
Look, as anyone will tell you, whether it's public markets, private markets, tech markets or non-tech markets, cycles are a feature rather than a bug.
Yeah.
We have had 2021, which to some extent was peak of funding exuberance, funding deployment. And therefore, it's very understandable in 22 and 23, either because of macroeconomic factors in US, either because of generally people having invested a lot of money. 22 and 23 have been relatively slower.
Yeah.
But if you take a 3 to 5 year view of India, and you take any macro indicator we have today on India, or any indicator inward looking on the companies and tech companies in India, we believe the trajectory is only going to be upwards and onwards. And therefore, from a medium long-term perspective, we remain very positive.
So what will that mean in terms of investment? So you have $2 billion invested in India, out of which a quarter is in fintechs, about $500 million. What will that look like in the next couple of years?
We don't see that changing too much. We think we have 3 core areas of focus as a fund in Elevation. We are currently investing out of our Fund 8, which is $670 million fund. We talk very, very deliberately about being very consistent in our investment pace, and even in 23 we've been as active as we've been in the past.
Yeah.
We believe in coming years we'll continue to do the same. We think consumer tech and consumer brands as an opportunity is a big area of focus for the fund, so that will take a lion's share. We think financial services and fintech is very, very core to our fund strategy and areas of focus for us. So that share will remain very high. And we think lately, India building products for the globe in terms of SaaS and enterprise SaaS. Within that, by the way, fintech SaaS, we believe will also be another core area of focus.
So this $500 million will not increase significantly? How much more are you looking to invest, if at all?
Fintech and financial services will anywhere range between 25 to 35% of our
the total pool.
Yeah.
All right.
And then depending on fund to fund, cycle to cycle, the percentages can vary. But suffice it to say that it's one of the 3 core pillars of our investment strategy.
What about the Delhi one? Let's talk about Paytm as well. You've been one of their early investors. We saw what happened since their listing. You know, the stock price hasn't really recovered much since. And now you have the founder talking about increasing his stake as well. What do you make of, how Paytm's evolved?
Look, there is a difference between stock market prices and business interesting and business fundamentals. As Warren Buffett famously said, stock markets are voting machines in short run and weighing machines in the long run. So true weight only gets discovered over a long run of time. But if you really look at the business fundamentals at Paytm, the journey so far has been to create a very, very strong consumer and merchant franchise, where you have hundreds of millions of customers transacting, tens of millions of merchants transacting, and then create almost a walled garden of use cases for them to keep using you time and again. Now, payments is only a wedge product, but if you now look at the metrics they have on lending, the roadmap they have on other financial products, we actually believe the true operating leverage of the business is playing out now. It's very visible last few quarters in the numbers that you see, and we think that financial performance should only continue to improve over time.
And your holding in the company now, it's, where is it at, and what's your outlook? I mean,
we hold about 15%, give or take. Our outlook on Paytm remains very bullish. As a fund which also has a dual responsibility to its investors to return capital, time and again we keep evaluating each opportunity on when is the right time to exit, when is the right time to double down. And such timely reviews we'll keep doing in quarters to come.
And when do you think you'd find an opportunity to exit?
There is, look, Paytm's been such a phenomenal investment for us. And if I look at the future outlook, actually to me the next 5 years look much better than last
So
few
you want
years.
to continue holding on to that 15% stake?
We will keep reviewing it very regularly and basis a time in business and depending on fund obligations, we'll take that calls in coming times, but there is no stated intent right now that I can talk about.
All right, a final question then, what is the exit window looking like generally? And I'm talking across your portfolio companies, whether it's e-commerce, Meesho, FirstCries, etc., to these fintech companies that you hold. Is there anything lined up in the near term? Because markets have been difficult. We haven't seen very many IPOs come to the market.
That's true. Look, again, the point I made in the beginning, which is capital markets, whether public or private, follow cycles.
Yes.
After 21, which was actually very exuberant in terms of seeing tech companies getting listed. And if you would have asked anyone in 2018 or 19 that will we see so many listed tech companies in India as of today, nobody would have guessed that. We think these cycles will come and go. We believe more fundamentally for the overall ecosystem, not just elevation. There are at least 25 to 30 very high quality companies where the business intrinsics are improving, they are growing, they're becoming efficient, and they're at the cusp of or already achieved profitability. And when those conditions get met, I think conditions are perfect for the listing to happen. And while it's very hard to say what will happen in 6 or 9 months, I am willing to place a big bet on the fact that in the next 3 to 5 years, India should have at least 30 to 40 listed tech companies in public markets in India.
Wow, that's a big bet to make, and I hope that does come true. Thank you very much, Mridul. Pleasure speaking to you.
Thank you very much.